Hello people, excuse me. Um, it's Friday, January the 15th, and I thought I'd make a quick video because I did have a bit of a lie-in this morning. So not my normal reasonable time to study charts, and I sort of fell back on what I used to do, and I don't mention this really enough, which is just literally flick through a few charts, draw a couple of trend lines. I got into the markets, as it were, at about 7:45, just running up to the London session. Just couldn't sleep, so switched my alarm off, lay there tossing and turning for a couple of hours, I think. So just didn't feel like kicking the backside out of it this morning. So yeah, just draw a couple of ascending or a couple of trend lines, which leads me to another small rant I will have in a moment about live rooms. But you know, the thought processes are always the same. Trend line, you know, connecting highs that make a lower low, lower high, and so on and so forth. So supposing you were looking to potentially trend this reversal here, you got the momentum and so on and so forth going on. Really and truthfully, what I do is just draw a line like that, and then I know this lot here is likely to be tested here. So if I'm thinking of entering there, without all obviously taking into account all the other things that we do, 3 candle reversals and RSI histo and stuff like that, on multi-time frames, I'll just draw, because I'm going through a few charts, I'll just draw an arrow below the line, reminding myself what I was looking at on this particular currency pair. And I did the same on this one, drew a connecting trend line there, because that on the line chart you can see high, low, lower high, lower low, and so on and so forth. So you could tighten that up now, which is why I like the line charts as well. There to there to there finally. And you know, you can also do your these are hand drawn for anyone that doesn't know what I do. Draw a couple of levels. Strictly speaking, that's not what I would call a valid support, because it hasn't created a higher high there. But you know, if you want to trade, don't trade into it, trade below it, because it's definitely powerful to push price up in a trend, even though it didn't break that. So you know, very straightforward. If you're half asleep or whatever, like I was this morning, flick through a few and find the best looking example, and then basically you're just trading the gap, as I talk about all the time, trading the gaps between support and resistance, supply and demand. So then what I had done here is draw a line on there. When the price was battling around this point here, I wanted to make myself be aware, careful, that I didn't get caught in a pullback, especially as this is around the Billy TT 15-minute bar, the 8 to 8:15 breakout that he trades. We know pound pairs do get chucked about a little bit at that time, so and really it's not a problem, just wait for a better entry. But if the RSI, and this is where I love the RSI so much, if we get that momentum trigger on the RSI, then we can get involved, you know, based on the strength of this RSI. And while I'm on about the RSI, it's important to mention also, you know, this is 97201. If this was minus 97202, I would treat that as a valid trigger. It is that precise. What 0.1 of a decimal point, or whatever it is, 0.001 of a decimal point, is good enough for me. So as long as obviously you've got decent gaps between support and resistance and so on and so forth. So that's it, 11 pip trade. Came into the markets, just draw a couple of lines, study what's going on with 3 candle reversals across all the time frames, higher time frames too, of course, and you are good to go. We can clearly see that as a massive level of support there, going right across at this point here as well, and the 141.5 level, that when these guys are considering going long, potentially retail traders, they will have their stops down here, and that's the theory behind going for these sort of different levels. Algos use them as well, and institutions and so on and so forth. But clearly at this point here, we could not possibly think of going long, even based on the H1 chart. It was all about just waiting for shorts. Rant. Well, after I finish trading the London Open, I tend to just whiz around a few of the trading rooms, and what I find really, really bizarre is they're all trying to reinvent the wheel. I don't know why they're doing it. None of the ones I visit used ascending or descending trend lines, which is just beyond pathetic, really. One of them that is a mentor and charges and actually trades real money for people, with as a percentage, he trades their money capital. He entered a trade yesterday at 5 minutes to 8 o'clock. 5 minutes before the London Open. Clueless, nothing on his charts. They don't use RSIs, these people. What he did was criminal. There's 300 or 400 people in that room, and they all entered a trade on his say-so. They got stopped out. He had a stop of something like 8 pips. It was horrendous. And tons of people, they wait ages for their trades in this particular room. I'm not going to name it, but they can have one trade a week, and they will go for 10 pips or whatever with a 7 or 8 pip stop, but just unbelievable, totally unbelievable. So the moral of that is, be careful of the rooms you get involved in, guys. Sitting there for hours, life's too short, really. It is just too short. So I go in there for entertainment with my first cup of coffee of the day after the London session, and occasionally they will have really good setups, because some of them got flicked through 5 or 6 charts. They're all waiting for these setups, and I will take 3 or 4 trades based on other people's setups as well, because if they conform to my method here, and that's what I recommend to everyone, and this is the point of mentioning this also, rooms are fine providing you know what you're doing. And once you've got a method, it doesn't have to be mine, it could be any method you like. Once you're happy with your method, then by all means pop into some of these rooms, have a look at what they have done, or alternatively on Twitter, find chartists that you listen to you, and then just make your life easy, as it were. But do not get tempted to do anything that doesn't conform with your plan, your style, your strategy, whatever. I can't stop drawing these lines. There is a perfectly good trend reversal there. There's the RSI histo trigger, and Bob's your uncle, up it goes. We just screen time, you can't get enough of it, in my opinion. But don't flick from method to method. Stay with something that suits you, and make money. Don't overtrade. One trade a day is all you need to do, and I did that for years and years and years, actually. And in a small way I sort of regret it, because having found the Twitter sphere, as it were, FinTwit, I can see, it's just exploded now. So and the confidence has as well. So anyway, guys, it's Friday. Don't overtrade. Have a fantastic weekend, and I shall catch up soon. Thanks for watching. Have a great day.